They have a different understanding of what it means to own a business, but then that can be very different from owning a private business that they've built compared to owning a public company in the stock market.
Welcome to Dock Street Advisors, where we're working to demystify the world of investing. Each week, we ask a question of one of our advisors, and this week, we're speaking with Spencer Ogden around the complexities of investing as a business owner. Let's get started. So, Spencer, what makes investing as a business owner different, and what are some of the things you take into consideration as an advisor working with business owners?
Hey, good question. I think there's two parts to it. One is the person part, and the other is the numbers part. So on the person side, a business owner is an entrepreneur, someone who's built up a business. They come at it with maybe a different attitude. So it's sometimes a different type of person, and they have different life experience in terms of what it's like to have built that business. They have a different understanding of what it means to own a business. But then that can be very different from owning a private business that they've built compared to owning a public company in the stock market. And so making that connection is some of the people side of it. They also have a good sort of fundamental understanding of how businesses work, but they don't necessarily think that applies to large multinational companies. And so part of what we talk about is how they're no different, and we can compare the same things in the same way you would make a investment decision about your own company or investing in a friend's company. You can make decisions about investments and otherwise. The other part, the numbers part, is more about what does their overall financial picture look like in terms of they have this large asset, or they had this large asset in the past of the ownership in their business. And what does that mean for how they're positioned otherwise? On the one hand, you could say that business that they own is like equity. So it's like investing in the stock market. But what we found is most business owners don't view it that way. They're not looking at the value of their business on a month-to-month basis, let alone a day-to-day basis. So they don't think of that as, oh, the value of my company is going up and down. There's a lot of risk in owning this company. It's more like, I know this company, I know how it works. If we go through a recession, I know which levers I can pull. And it's not a risk per se. The cash flow changes, but it's not a risky position. In some cases, they think of it more on just that cash flow basis. Like, I know this business is going to create income between X and Y for the years forward. In bad times, it'll be on the low end, and good times on the up end. So it's almost more mentally like a bond to them, a consistent stream of income, than it is owning equity. And so in that sense, there's actually plenty of room to take risk in the public market otherwise. So it's a little different than maybe an academic thinking about it.
If you had to summarize it pretty quickly on what do you think are the biggest concerns business owners have in why they maybe aren't moving forward with investing outside of their own business?
I think for someone who still owns their business, it's a comparison of rates of return and saying, I can reinvest in my business and grow it this way, and I think I can get this type of return out of that. Other business owners have reached a point where they can't really reinvest. The business is as big as it gets, or it doesn't need more reinvestment. So that frees up cash, and they say, now I need to invest elsewhere. But they're still in that land of, okay, I could invest in another business that I know, I could start a new business, I could invest in real estate. So comparing those rates of return, again, someone with an entrepreneurial mindset usually comes at it from that, I can put this in, what am I getting out of it, that rate of return? And so comparing those things for a business owner is usually front of mind. For someone who's sold their business, they are of the mindset, I've got this cash, I know what it means to run a business and generate income from that. What do I do with these assets now that I have assets that are liquid in an account rather than a business that I'm operating? How do I shift my perspective? How do I generate spendable income out of that pile of assets?
Great. Anything else on the business owners and how they invest in this space?
I think the other part of it is that for any business owner, usually there's some intergenerational thought there, whether it's kids that work in the business or just what's going to happen either as a retirement plan or when they pass away. So all those sort of transitional things for many business owners, once they get to a certain age, that becomes pretty forefront. Both how does the business continue to exist? How do they take care of their people in the business? And how do they take care of their family? Different from every situation is different. Some trusts do need to be managed in a particular way. Again, that comes back to the complexity. Trusts that are written with income provisions and things like that might need to be adjusted on the investment side to fit that framework.
Thank you again to Spencer for taking the time today. As he mentioned, investing as a business owner can raise a multitude of questions. If you're a business owner and you have questions about investing beyond your business, please feel free to reach out via the email address found in our bio, or you can find out more information on our website, docstreet.com. But as always, please come back next week as we'll have another question for our advisors as we continue to demystify the world of investing.